Eric Mwale with a weekend analysis for November 15th and November 16th, 2014. Let's take a look at the close in the US markets. On Friday, we closed with the Dow unchanged, pretty much. NASDAQ slightly up but unchanged. S&P 500 unchanged. Gold was up 2.3%. Crude oil was up 2.2%. And we see that the VIX was down 3.5%. For the week, the S&P 500 was up 0.39%, and we see that the Dow was also slightly up, closing higher by 0.35%. And lastly, the NASDAQ was up the most, 1.21%. So a nice move on the NASDAQ. So that's how the charts settled out at the end of the week. Now let's go back to the same chart. So this is the NASDAQ, and just keep in mind the RSI. I'm going to draw a simple line on the NASDAQ, connecting the highs, as you can see, connecting the tops of the RSI, and that's exactly where we ended the session on Friday for the NASDAQ. Take a look at the Dow. You can draw it like that, or you can take the previous breakpoint like that. That's where the Dow closed on the weekly RSI. Take a look at the S&P 500. You can take the previous break, draw a straight line, or draw the line connecting the highs. So this is 2014. I want to show you something interesting. If we go back and look at the weekly charts in 2007, same time, about late in the year, October of 2007, this is the NASDAQ weekly chart, and I'm going to draw another simple line connecting the highs like that, or a line connecting the previous short-term move like that. You can see as the market made highs late 2007, this is how the charts look like on the NASDAQ. Take a look at the Dow, late 2007 at the highs, a line connecting the tops like that, and also a line connecting the previous breakpoint like that. So we see a lot of this uniformity in 2007, and as you know, this led to the crash of 2008. Take a look at the chart for the S&P 500, late 2007, and again we see that the market was making highs, connecting the tops of the weekly RSI, and also connecting the previous breakpoint like that. So this is exactly what's going on in the current market, and so we have to be aware that the market could do the same thing. So that's one view. There are three views. Another view of the market in 2007 is this improving highs, declining technicals on the S&P 500. Let's take a look at what the Dow was doing in 2007. Improving highs on a weekly level, declining RSI strength, negative divergence in the Dow at the highs. Go to the NASDAQ, and the same thing, lower lows on the RSI, improving price highs. That is in 2007. We come to the current market, take a look at the S&P 500. Now, assuming we go down from here, we've been making higher highs. The RSI has been making lower lows. That is the S&P 500. Oops, take a look at the Dow. Same thing, higher highs in price. RSI has not really broken out. And the same thing can be said with the NASDAQ. We've been making higher highs, but the RSI has yet to really break out. Now there's another third observation, and this goes to a warning signal. Take a look at this drop in the NASDAQ. This drop, summer of 2007, and then take a look at the reversal signal or reversal move from here to here. That was a very sharp move, which was the biggest move throughout the last 2 years prior to 2007 highs. So let me show you again. What I'm saying is there was a warning signal that was fired by the market. So again, it looks like what the market did here was a warning signal, that drop there, and then very strong move from here to here, but that move was fake, and we know that because after 2007, late 2007, the market dropped. So this is the NASDAQ weekly. The same thing can be said by the Dow. 2007, you got this warning drop. This is a warning signal, and then a very sharp reversal from the lows here to the highs was the biggest move in a short period of time prior to that. So that the length of that move was a warning signal, in my opinion. Now let's take a look at the S&P 500, 2007, late 2007, and also you see here that there was this big drop that was followed by a very sharp, strong move to new highs, and that move is almost similar to the current chart. So let's go to the S&P 500 currently, and we can see here recently we had this, what I believe could be a warning signal, a big drop followed by a sharp, huge move to new highs, and this move from here currently to the new highs over the last 4 or 5 weeks has been the strongest, biggest continuous move off the lows here to here. Take a look at the Dow daily or the Dow weekly currently, and same thing. You have this big drop, sharp drop, followed by a very strong move back to new highs, similar to 2007. And let's take a look at the NASDAQ weekly, and obviously the same type situation. You got a warning signal that is ignored by the market, and you go back to new highs, and that tends to be leading to a very sharp move. The market seems to be exhaustive at that point. It would not surprise me if the market goes down. Of course, this could be different from 2007 in the sense that the market has a chance, for example in the Dow, of breaking out, and instead of rolling over like that, the market has a chance, if it chooses to actually break out and press on the accelerator if it can trade above that line on the Dow on the weekly, and on the S&P 500, for example. All it has to do is break out above this declining line and trade above that line, and that is going to be different from what happened in late 2007. Of course, if we turn around and show resistance on the current S&P 500 weekly line, so at the end of the next week or so, if the market turns around like that, then that is very similar to what happened and at the highs leading to the tops of 2007. Now if we take a look at the NASDAQ, and if we draw a line connecting the previous high here on the RSI, there was a break somewhere there, and draw a straight line from there, we see that if the market is going to stall, it's going to be around these levels on the NASDAQ. So that's one view that plays into anyone who is short the market, that this could be a resistance level on the NASDAQ. But if you're a bull and looking for bullish reasons to continue thinking the market goes long, seems like there's a slight breakout here above the previous RSI top lines. So that could be a reason why the market has been staying strong and holding above that breakout level. So depending on how you look at it, and I guess we'll know that in the next couple of days, whether this is actual resistance or probably this was also a breakout. And even though it seems like a slight move above the previous declining line, maybe that's all the market needs to continue pushing higher. Go to the NASDAQ on an hourly chart, and we have this line here. So this declining RSI line that was connecting the previous highs on the RSI here and through there and there. Once the market broke above that and right there, which was this nice move here, the market of course has done well, moving to new all-time highs. So if we extend the same line, you can see what the market has been doing is using that line for support during the every recent short-term hourly pullback. This is where the market has been coming back and finding support here with those lows, and recently here, which is this low. So we can see that as long as the market is holding above this line, then the bulls are squarely and totally in control of the market. Let's take a look at the Dow daily, and you can see here that the Dow daily, just like the NASDAQ, you can argue that this was a breakout above the previous declining RSI tops line. So there was a breakout. The market continues holding above that on the daily. So if that continues being the case and there is no uniform activity back below this line, so unless there is uniform activity back below the line like that, if we don't get that uniform activity, then this is a very strong breakout. We should expect higher prices over time. We go to the transports weekly, and we are looking at this channel here, which the market is above that channel and continues holding above that channel. So I was thinking coming into this week that more than likely the transport index would have been pushed back into the channel, but it continues holding above that. So we'll see what happens. It's not unusual that for 1 or 2 weeks they stay above that channel and then they get a sharp reversal back to the channel to average out this move above the channel. So we'll see how that plays out on the hourly. On the weekly here, sorry, there's this line here connecting the highs on the weekly RSI, similar to that of the S&P 500, the NASDAQ, and the Dow. So if this is where they stall, then we could expect to see a pullback off these current levels. The transport index daily, and you can see here that there's a line connecting the highs there, the previous highs, and it is exactly where it has stalled over the last couple of days, connecting these highs. That's where we are stalling. Let's take a look at a clean chart. Take a look at the daily there. Take a look at a clean chart for the transports. What I'm trying to say here is there's a line connecting the highs like that, and you can see that we've rolled over above the line and back below it, and we've also moved above 69.1 on the RSI on the daily, which seems to be like probably an early sign of a reversal signal. Also, there's a break previously of this level there, and you can see that if we can roll over below that line with uniform activity, that would be a sell signal. Don't forget the magnitude of this reversal from here to here is the biggest, sharpest move over the last year on this chart, which might suggest that the stock is running out of energy, out of momentum. On the daily for the S&P 500, we have the possibility of two opinions. You got a breakout above the previous declining highs on the S&P 500. So connecting these highs, there was a breakout, and since then the market has done well from around here. That's when the breakout took place. So the bulls continue being in control as long as the market is above this line. So that's one view. The other view is probably around here we could get a reversal from the previous break of the RSI highs to a straight line. You can see that that's where we are trading, and if the market can pull back off these levels, then we start wondering whether we've seen a major drop or a major high because of this reversal signal on the S&P 500 there. Now this is similar to what happened on the S&P 500 daily in 2007 as an example and an idea. You can see there was a break here, and the market did eventually stall at those levels. So that could be what could be happening here. Of course, we'll know over time. So this is a current S&P 500 daily chart. So that could be a problem if the market starts pulling back from this RSI formation. If we take a look at the S&P 500 hourly, and I'm using 26 period here on the hourly, and we can see slight improvement in the highs there on the hourly basis, but the technicals are not making higher highs. That negative divergence could be a problem for the S&P 500. So let's keep that in mind, that we're making higher highs, but the hourly RSI is not making higher highs, so maybe it shows that the market is running out of energy. Also, if we take a look at the S&P 500 30-minute chart, making higher highs on the 30-minute chart, but the technicals are making lower lows. So that could be a problem short term, something we don't have to necessarily pay full attention to, but this could be a problem because of this technical deficiency as the market is making all-time highs. Let's take a look at the Canadian market, and here on the daily we see that it is back to the declining 50-day moving average, so we'll see whether it can hold above that. If this turns into a resistance level, then that's not going to be what the bulls want, and we could see lower prices. But if it can engineer some type of movement back above that declining 50-day moving average, then maybe it's trying to build after a significantly sharp drop recently here. Now there is also another resistance level that I see on the RSI on the daily, and it is just by drawing the line connecting the recent highs on the RSI, so something like that. You can see where it's coming in contact is where it closed on Friday. Also there's another line connecting the previous lows, so this line goes through most of the lows on the way up and through this uniform activity, and recently there was a break, so that break in the RSI there corresponds with this break and a push lower. So we extend that line, and you can see that it comes in contact with exactly where it's trading right now. Another view can be seen by taking a look at the hourly for the Canadian market, and we see that we came off the highs here and find out where that RSI break took place, and you can see it somewhere here. So draw a straight line, and so this has become resistance, which was off the highs there, and we seem to be stalling here ever since then. So unless it can break out above this previous breakpoint on the line on the RSI, it could stall. So the bulls want it to be trading above the line, and definitely the bears would like it to continue showing resistance and eventually rolling over. Let's take a look at the SVXY, which moves in opposite direction to the VIX. So the VIX inverse the VIX, in other words, and you can see that it's also come back, just like the Canadian market, even though they're separate market, come back to a declining 50-day moving average. So if it can not move above that, that could be slight resistance here with that declining 50-day, or if it can have enough momentum to push above that, that could be good. So a couple of observations. So there was a line here, channel that was broken here, and that led to a serious plunge in a couple of days. So we extend the same line. You see that this is now back test area, which could we need to watch for confirmation of resistance. Right now we are seeing that it looks like it is resistance. Also the previous RSI break took place here on this instrument, which was this break at those levels, and since then you see we got a drop, and so we extend the same line that gave us the break, and since then we see that this is where it's been stalling. And over the last couple of days it came and made contact with that line and also seems to be finding resistance here. So if we use this instrument by itself, it might be suggesting that the market is due for a pullback. If we go to the weekly, and you can see that it is back to the declining 10-week moving average, 13-week moving average. If that becomes resistance, that could be a problem. And also there's a line, previous lows on the weekly RSI, which held. Now this has been established over a period of time. This lows here, this line held while the stock was in this nice strong uptrend. It is my feeling that now this could become resistance, especially if we get a move back below the blue line. So if this line becomes resistance now after it had been support for a long time, then this is a different market that we are looking at. And also there's another line that could be resistance connecting the current highs on the weekly RSI if you do it like that. So that could be resistance, and also if it moves back below the previous support line, then that could confirm resistance, suggesting that the market is also due for a pullback. A quick look at Apple, and we see that it continues doing well because the RSI continues holding above 69.10. We take a look at the weekly. You see that it has been picking up some momentum here, and all this began ever since it moved its weekly RSI back above 69.10, and on the daily you can see that it continues being on a strong upward climb recently because the RSI is now back above 69.10. Let's take a look at the markets on a monthly chart. Go back to the S&P 500 monthly, and we can see that the monthly continues being strong, holding above 69.10 on the S&P 500, holding above. Let's take a look at the NASDAQ. And it too continues holding above 69.10, which is a sign of a strong market. And we take a look at the Dow, and you can see that the Dow is also holding above 69.10. So as long as the major averages are holding above 69.10, expect the market to continue being strong. Now this is part 1. I'm gonna be recording part 2 sometime during this weekend, so check your email if you're a subscriber. Eric Moore, the good luck, peace, and blessings. Woo!